One of the reasons for this is a lot of you probably remember back in, I believe it was 2021 or 2022, a condo building just outside of Miami, Florida collapsed. That event single-handedly changed how the mortgage industry lends on condos, because what happened is super tragic, but the building collapsed, and unfortunately all those condos in that building were at one point financed if they were not purchased in cash, right? So all those loans in that building went bad and people couldn't pay them back for the most part, right? So those types of risk factors when it comes to condos are you're collectively owning the building with a bunch of other homeowners, right? Homeowners associations equals collective ownership. You have things like HOA fees and other things you have to worry about. So the mortgage industry says, okay, it's a little harder to get financing on condos. So that's just one thing you gotta look at. Now, I'm not saying that condos are necessarily a bad purchase. Usually they're gonna be lower purchase price. They might be in better parts of town, bigger bang for your buck buying a condo versus a single family home. But you just have to be aware of these types of things going into the process, because it will affect your financing. So switching it up a little bit and looking at more suburban or rural areas of Tennessee, you're gonna see different types of financing versus loans for condos and stuff like that. We're gonna see more manufactured housing, homes on acreage, and even homes that are kind of unique, right? Like log cabins or something like that. Anytime you have a home that is a little bit unique, or it's a manufactured home, or it's sitting on acreage, those types of things matter when it comes to the financing. Sometimes if homes are too unique, it's too hard to compare them to others in the area. For example, if you want to buy a log cabin, but you're in the middle of town and you're only one of very, very few log cabins in that town, most mortgage companies will not be able to comp that, and you will not be able to get an appraisal, which will not allow you to be able to buy that log cabin. However, if you want to buy a log cabin in the mountains, like the Smoky Mountains or something like that of Tennessee, that's easy to comp because there's tons of log cabins out there. So it depends on what type of home and where you're buying it. So typically over about 10 acres, it gets harder to get financing for a property like that in the traditional mortgage sense. Now, there is other types of financing that are not mortgages, but we're talking about mortgages, so it's harder to get these types of loans on acreage properties.